on the corporate side, your critics say that on the repatriation of overseas assets, that history would show that companies don't always use those assets when they're repatriated to invest in manufacturing and jobs and the things that you guys are talking about. They do share buybacks and other financial engineering. How can you guarantee that that won't happen this time?
So look, we've heard that numerous times. If that's our worst case scenario, that companies repatriate their money and they use it for share buybacks and dividends, what happens? They buy back shares, they issue dividends. They pay the repatriation tax, we get another 20% tax on capital gains or dividends, and then the people that get that money back do what? They reinvest it back in the economy, in new investments, in new capital. We're putting some very enticing rules into the system that will entice people to invest capital for the next 5 years. We're giving people a 5-year write-off that they can instantly expense. So look, if that happens, that's fine. We know that that money will get invested right back in the economy and drive jobs, drive economic growth, drive wages, and drive prosperity. Right over here.
Thank you, Gary. You've been asked a question twice and you didn't answer. I'd like to get you to answer this because I get your messaging on the middle class. You've made that very clear. But this tax plan as it stands now appears that it will benefit the president and his family. Why not just be candid about that?
Look, I've told you it will benefit the middle class. I think that's what American taxpayers care about, what they take home. They care about what they have to spend. That's what they care about. That's what I care about. I care about what I pay in tax. I bet you care about what you pay in taxes.
The president's message is here too, and he's saying he won't benefit, yet it appears as though the way this is put together, he actually will. And it gets to the idea of wealthy Americans around this country, which people do care about. So can you just
let me take you through the components that you're all obsessed upon for a minute. And Sarah's going to yell at me because I'm taking too long here. So you all talk about the death tax, and that being a great benefit. The two biggest drivers for repeal of the death tax are the NFIB and the Farm Bureau. That's small businesses and farms. Those are the two organizations that spend the most time lobbying on the repeal of the death tax. Death tax has the biggest effect on them, small businesses and farms. Wealthy Americans do a lot of estate planning. They can use trust. They can use all types of things that are legal within the tax code to make sure they don't pay death tax. On the AMT, I'm not going to get into deep calculations on AMT, but at a broad brush level, when you do the AMT, once you get rid of the deductions of state and local taxes, that's the biggest add back in AMT. AMT becomes irrelevant once you get rid of the deduction of state and local taxes. So all the things that you're trying to pull at, you're not looking at the plan in its entirety. They don't make sense once we redo the plan and once we simplify.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.